What's up? What's up? Good morning. Today is Tuesday, November 23rd, 2021. I am Jordan Dove, and it is time for your daily dose of Dove. Sorry I missed you guys yesterday. We were extremely busy in the office, so I'm sorry I couldn't get a video out, but here we are today. Let's get to it, all right? The 10-year Treasury yield bond is up today, 1.653%. Up, up, up. That means interest rates are going to go up. The 30-year fixed has no movement from yesterday, sitting at 3.24, which if you know last week, you follow the channel, we were at 3.06 is what we closed the week at. All right, so couple things. I had a great phone call with one of you subscribers who called me on Friday. We had a discussion about multifamilies. He owns multifamilies and he does pretty well, semi-retired, older gentleman, and great conversation. My question he had was about financing, and he couldn't go the traditional route because he's an investor, and the traditional route, conventional financing, they want you to have your W-2s, last two bank statements. They want you to be a full-time employee. That's the traditional way of financing. So a lot of times self-employed people will have difficult financing. So one way around that, which I wanted to shed a little bit of light on, and I'll dig deeper into that another time, is there are private lenders and other lenders out there who will do bank statement loans, and these are for self-employed people. It's a bank statement loan. They'll go based off of your last 12 bank statements and the income you're showing on those statements. Now keep in mind, you will most likely pay a higher price in terms of interest rates. They're going to charge you a higher interest rate. But then again, if you make really good money and can't qualify traditionally, it may be worth it to pay 1 or 2 points higher on that mortgage note. They'll typically also require about 20% down, so they'll do an 80-20 loan to value ratio, meaning they'll finance 80% of the loan and you have to put down 20%. Okay, so a couple weeks ago I talked about the Zillow meltdown and what happened with Zillow. So I've been receiving this question, what's going to happen next with them? Are they going to pivot? What are they going to do? So we are going to talk about what happens next with Zillow. And the immediate question that comes to mind is what happens to all the homes that Zillow bought? And much of it has been made in recent days about the fact that the company is sitting on 7,000 unsold homes that it now needs to sell. But in fact, the total number of homes that Zillow needs to sell is probably higher because the company has already begun the process of buying many properties while not yet completing those transactions. So they have many properties in escrow and they're obligated, they're contractually obligated to go through with those. So in its shareholder letter published this past Tuesday, Zillow revealed at the end of September it had a total of 9,790 homes in inventory with another 8,172 homes under contract. And those numbers are now over a month old and have no doubt changed somewhat. But the key is to keep in mind is that they were nearly as many homes under contract as there were that had been purchased outright. So you can double that number of homes they're actually sitting on. That means even at this point, Zillow is likely still has thousands more homes it will be purchasing even as the iBuying program or internet buyer program officially winds down. That's interesting. So when asked about the situation, a Zillow spokesperson told Inman that the company intends to follow through with those contracts that has already begun on the purchases. The company also plans to sell homes quickly and on the open market where they would be available to either owner-occupants, individual investors, or institutional investors like our buddies over at BlackRock and the Wall Street guys buying up all the rentals. We've talked about this. You know what's going on. Okay. Zillow is also expecting to offload these homes within 2 quarters. That timeline is a result of the time it takes to buy, renovate, list, and sell a house, a process that even in a best case scenario can take 2 months or more. So the short answer to the question is what happens to the home? And it's relatively simple. Zillow's going to sell them. And we're seeing this in our market. We have a client under contract right now purchasing a Zillow property. Zillow listed the home below market value. We ran the numbers. I was like, hey, this makes a lot of sense. I think this one, in my opinion, would appraise for much higher, and it did. Our client got it at list price, and it appraised for $23,000 over the purchase price, and we're talking about a $250,000 range 3-bedroom condo. Okay, I also have a client, which makes me beg to differ, is Zillow actually going to do the flips? Because I have a client who called me and they're like, Jordan, how come Zillow bought this property across the street from me for $417,000 just 2 weeks ago, and it's relisted back on the market for $387,000, which is a $30,000 hit on the price, plus the fees that they're going to pay. So it might end up being a $40,000-$50,000 hit on them. And he asked me why they're doing this, and I referred him back to my video on what happened. They messed up. Their algorithm was messed up. Their estimates were poor. It was just a poor model. They got into the game a little bit late versus a company, say, like Open Door. So if Zillow is saying that they're going to be still doing the renovations and flipping them, that takes a couple months. In this case, I think they just listed it, liquidated it. They're just trying to recoup some of their cash. So the next question we have to ask is, where does Zillow pivot from here? We know that they've always made their money in selling lead generation to agents. That's where they started their business. Curious home shoppers would start on Zillow and they would capture their information, sell those leads to an agent. Agents paid a lot of money, and that's how they got started. But where does Zillow pivot from here? During the call with investors on Tuesday, the co-founder of Zillow and CEO Richard Barton said the company's 2.0 vision, which is a major part of the iBuying process, it remained alive. Instead of buying houses outright, however, the company would focus on programs that are asset and cash light. The comment hints at a pivot for Zillow, not a ZIVOT for pillow, though Barton didn't say specifically what that pivot might look like. However, when he wrote a day later, real estate analyst Mike Del Prete suggested it could turn into what he calls a power buyer. In other words, a company that offers services such as cash backing to home buyers rather than working with home sellers. And in an email to Inman, Del Prete elaborated, saying he wouldn't at all be surprised to see something like Zillow Cash Offers powered by the Zillow Home Loans business. And the idea is that such a product could allow consumers to get instantly approved for a purchase or enable them to buy before selling their existing homes. And Del Prete added such product offerings would offer a significant amount of value to home buyers while also being quite a bit easier than iBuying itself. And it's my opinion that Zillow is going to pivot into becoming a lender and will compete with e-lenders like Rocket Mortgage. They're still very flush with cash, have a lot of institutional investors. They can always raise more money. They're going to liquidate these properties, have cash. What's interesting about that, though, is I think they might actually have a different paradigm and shift to this where they may finance their clients, but there may be a way that the buyer can purchase the home in cash using Zillow's cash and then finance through to make their offer look stronger. I think there's a way that they're going to try to structure that, which would be really, really interesting. So why did the Zestimate fail? I've been telling people this for years. For a long time, do not trust, Zillow said my home's worth this, it's worth that, it's great, whatever. Because the reason why the Zestimate failed is because their algorithm does not factor in the condition of the home, which is extremely important. So important. Zillow has never seen, when was the last time they sent somebody to come look at the inside of your house? Never, right? They don't know the upgrades. They don't know the condition. Zillow only goes off of the basic home facts. Their algorithm, anyway, they go off the basic home facts such as bedrooms, bathrooms, square footage, and what similar properties have sold for. So you can have two exact model matches homes, say they're each 2,140 square feet, and one could have burned down to the ground, and the other could be an exquisite, high-end, completely remodeled and renovated Taj Mahal, and Zillow would not know the difference and would price them near the same when they're not worth anything close to the same. Okay, so that's how their algorithm messed up. So that's the update on Zillow, where they pivot. Hope everyone's doing well. If you can't get traditional financing, possibly look for a private lender who can do bank statement loans. Okay, if you guys like the content, please like, subscribe, share, hit the bell notification, leave your comments. Make sure you enter our raffle. We're doing a $250 cash giveaway to a lucky winner to help with their holiday shopping or bills or whatever you need. Go to jordandove.com/raffle. Hope you guys have a great day. Talk to you tomorrow.